Hi guys, here's this week's top crypto news for Realtors. Federal Risk Panel warns about crypto, but what is the real concern? Celsius founder and CEO Alex Mashinsky steps down. What did he do? Kim Kardashian had to pay a very large settlement with the SEC. It was $1.26 million for something that she did regarding crypto, and I'll explain what she did wrong. Hi, I'm Rich Hopen. I'm the creator of Crypto News for Realtors and a real estate broker with Compass in New Jersey. Throughout the week, I monitor the crypto news and major news and crypto publications. I listen to crypto podcasts, and I follow the crypto influencers on social. I sift through it all, and I write a weekly newsletter with about 1,000 active subscribers, and I write Crypto Corner for Inman. I've given crypto presentations to real estate offices around the US, and now I'm taking my crypto content and making these YouTube videos. But before I jump into this week's news, if you could do me a huge favor, hit the like button and subscribe to my channel to stay up to date with crypto news. So let's get into it. A federal risk panel warns about crypto. Treasury Secretary Janet Yellen chairs the Financial Stability Oversight Council, and this week the council issued their report entitled The Report on Digital Asset Financial Stability Risks and Regulations. Yellen said the current regulatory framework has helped largely insulate traditional financial institutions from crypto asset-related financial risks. However, she warned that as crypto grows, if new regulations are not in place, crypto's interconnectedness with traditional finance could pose risks to the U.S. financial system. It's an interesting comment from Secretary Yellen. Clearly, there's a need for crypto regulations, which will flow out of crypto legislation, and inevitably that's going to be happening in 2023 after the new Congress is sworn into session. Also this week, the Consumer Financial Protection Bureau reported an increase in consumer complaints against crypto exchanges. Celsius founder and CEO Alex Mashinsky steps down. So Celsius was a large crypto lender that built its customer base by paying high interest rates, sometimes up to 18%, and claiming that Celsius was safer than traditional banks. When crypto prices fell in June, everything started to unravel for Celsius. They froze customer accounts and then filed for bankruptcy in July. Celsius owed its customers $4.7 billion. Well, bankruptcy filings this week showed that Mashinsky withdrew $10 million in crypto between May and the bankruptcy filing. Not cool. And Mashinsky stepped down as CEO. Celebrity Kim Kardashian pays $1.26 million to SEC to settle a claim. In June 2021, Kardashian promoted the crypto token Ethereum Max as a good investment. She posted on her Instagram page, "This is not financial advice, but just sharing what my friends have told me about Ethereum Max token." Kardashian, in actuality, was paid $250,000 by the crypto company for that post. The SEC chair Gary Gensler said Ms. Kardashian's case serves as a reminder to celebrities and others that the law requires them to disclose to the public when and how much they are paid to promote investing in securities. So that's it for this week's crypto news. Not much big news, but before I wrap up, I wanted to share some thoughts about last week's special issue, which focused on macroeconomic issues. So I wrote about inflation, CPI, the Fed, Treasuries, consumer sentiment index, prime rate, mortgage rates, and more. And this past week, while a lot of those topics were fresh in my mind, I saw how reported data in one area impacted another. Great example was on Friday, the unemployment numbers were released. And I knew from my research from the previous week that if unemployment had not increased, which would be bad for the job market, but if it had not increased, the Fed would continue their tough stance on rates. And that's what happened. Over 263,000 jobs were added, and the unemployment rate fell. The markets expected that the Fed would not ease up on their rate hikes, and the stock market in turn dropped. When the stock market drops, crypto also drops. So what about mortgage rates, which is a major driver in buyer demand, as we know? Well, the 30-year fixed mortgage rate follows the 10-year Treasury bond. Unfortunately, bond rate's going to go up, and so will the mortgage rates. And it's just the way it is. The reason I'm mentioning this is that I've discovered, as I've been paying close attention to crypto, that's caused me to become educated on economic issues. And that in turn has helped me understand what's happening in the real estate world. So If you haven't read that issue from last week, I highly recommend it. If you have any crypto comments or questions, write them below. Remember, stay crypto curious. It is definitely early days in crypto, and now's a great time to become crypto savvy. If you have any questions about real estate in New Jersey, reach out to me. I'm your guy. And that's it. I'll see you next time. Have a great week.